We have Treasury yields rising, tech stocks selling off. Do you expect that to continue?
Not in the near term, Stuart. This rise in rates is no surprise to us. We've been talking about inflation is going to reaccelerate this year, and the 10-year, we believe, will ultimately get to 5% and higher at some point in time. But in the near term, I expect a breather. Rates have moved really fast, and I expect to stay range bound. I'd love to see it get under 4.7 and just stay range bound in that 4.6 range. In that environment, the market will be just fine, and I think you'll see a bounce. It's a little overreaction over one day, in my opinion. However, 2025 investors need to have a playbook on what they're going to sell, because that will be a major headwind, and it is getting closer and closer to that time when we will be hitting the sell button.
You're buying NVIDIA.
NVIDIA's been our biggest position coming into this year. And look, even after yesterday's big drop in that name, which none of us like to see, it's still up over 4% to start the year. There's not a better company from a fundamental perspective to own. And because it's a large cap with large profits, I believe NVIDIA will give you the signal as to when to get out of the market. It will be one of the last ones, in our opinion, to break. And when it does break, that will be the clear-cut sign that we need to rotate out of growth and play some serious defense.
What would you call a break in NVIDIA's stock? Down to like 120 or something?
So this, may sound as a shock here, but I think we'll see 160 before we see 120, Stuart. But when the market does break, if rates do go to where we think, you'll see names like this, in my opinion, drop by 40 to 50%. And that shouldn't come as a surprise. That happens in every type of short-term bear market that I think we're going to have to navigate through. So we are not buying and holding this year. You have to be nimble, and you have to concentrate in the areas of strength. There are already many areas you need to stay out of, in our opinion, that have broken down. This has been best of breed, and if you've been here, you've had a good start to this year, even with yesterday's sell-off.
My apologies, Eddie, but I'm going back to my old theme. What's wrong with 4.25% on a 2-year Treasury in times of uncertainty like this, especially when you're in your 70s?
There is nothing wrong with that, but Stuart, I think you'll get a better rate if you're a little patient, because this data is coming in hot, and I think the Fed has completely miscalculated things, and if we get a 5% on the 10-year, that 2-year is going to follow as well, too. So we'll be right there with you at some point in time, rotating into fixed income, because there'll be some fantastic opportunities in that space.
Eddie Ghabour, we hear you. Thanks very much, Eddie. We'll see you again real soon.